Hi, Jonathan York, Bay Financial Partners, looking at investment markets. The Iranian situation is still dominating global investment markets. Now, on the one hand, you have Trump coming out and sort of posting various snippets on social media, saying Iran is looking at making a deal. They've contacted us. They want to talk. They want to do this. They want to do that. You then get the Iranians coming out and said, actually, no, we haven't said any of that. We're not looking for any discussions with the US. We've got nothing to discuss. We need them to take away the blockade. So that's obviously presenting quite a bit of volatility out there, both in the oil markets and also global equities. But really, it's looking like Trump is trying to find a way to sort of extricate himself from this issue because it certainly domestically is losing a lot of support, and you've got the clock ticking towards those midterms. Which at present it's looking like the Republicans will definitely lose the House and potentially could lose the Senate as well. So really, it's just a question of wait and see. I mean, obviously, Trump came out and said he was pausing the attacks on Iran. And what was quite interesting was the commentary he used. He says because the government's fractured and he's waiting until they come up with a unified proposal. Which, given the current stances on both sides, it's hard to see how that's going to come to fruition. Now, certainly Kevin Warsh's Senate confirmation has been pretty frosty out there, and again, it's going to be pretty interesting to see how it sort of proceeds. Although a major stumbling block from Tom Tillerson in the fact that the DOJ has now dropped the case against Powell and the Fed. And that should help smooth the confirmation of Kevin Warsh. But what will be very interesting to see is obviously once that passing of the Fed chair happens, whether Jay Powell remains as a Fed governor. Because his term doesn't finish until 2028. Now, the Fed's meeting this week. No one expects any change on interest rates, and it's going to be very hard to see how they can cut rates in the foreseeable future, given the current inflation outlook. And certainly that won't please Trump because he's come out and said that once Kevin Warsh gets into the Fed, he's expecting interest rates to be cut. But given inflation is currently around sort of 3% and looking to rise, the Fed's target is 2%. It's going to be very hard for the Fed to come up with a credible case on why they're cutting interest rates. And given that inflation outlook, interest rates in the US are nudging up, but that 10-year is 4.35. The 30-year is approaching 5% at 4.95, and the 2-year is 3.85. So that gives a pretty clear indication on which way the markets view interest rates going in the US. Now, what will be interesting as well is the proposed meeting between Trump and Xi Jinping to see what's discussed there. Now, as mentioned, oil's been pretty volatile given the comments that are coming out, really the sort of opening in the Straits of Hormuz. Currently it's trading around $100 and change. But also interesting as well, the UAE has come out and said they are going to leave OPEC. Now in the UK, as expected, CPI is slightly higher at 3.3%, up from 3%. But core is still travelling around sort of 3.1. Now again, given those figures and the likelihood that inflation is likely to rise over the next sort of 3 to 6 months, given the oil issues, it's going to be hard for the Bank of England to cut interest rates. And really the UK economy desperately needs an interest rate cut because growth is certainly stagnating, if not going backwards. Obviously, a similar case in the EU, expecting inflation to increase over the next sort of 3 to 6 months. But also as well, you've got the Russia-Ukraine war in sort of full flight and showing little signs of ending. Indeed, Putin's just had a little boost over the last sort of month because Trump allowed countries to buy Russian oil, which put further funds into the Russian economy, which obviously was used for the military operation in Ukraine. Although interestingly, quite a bit of pushback now from the Russian public. They've had a big crackdown on internet use, as the government's still trying to control the narrative. Now the Australian economy is still sort of pushing along at a pretty reasonable rate, really obviously helped by the mining and resource sector. But also as well, the financials and the big banks have started to come back as well after a pretty big sell-off. And that was really on the back of the price-earnings ratio for CBA. Now here in New Zealand, as expected, that CPI was a little bit higher. Core came in for the March quarter at 3.1%. Now obviously that does pose a little bit of an issue for the Reserve Bank because their sort of target is 1 to 3% and really like to keep it around that sort of 2 to 2.5%. But given the inflation is sort of a supply issue, rising interest rates is not going to bring down the price of oil. In terms of the domestic economy as well, hoping that the recent payout from Fonterra will be spent in the economy. Also as well, a little bit of a pickup in terms of turnover in the housing market as well, which is encouraging. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we'll look forward to speaking to you soon.